Slovakia is among the economies that have been boosted by the looming deadline for EU fund utilization from the previous programming period. What can be expected next year regarding both economic growth and the Slovak bond market?
We have actually experienced a very large influx of public investment this year, which was due to the EU funds. Next year this won't really be the case because we will get back to the standard drawing of funds, which will be much lower than this year. But on the other hand, we can still expect growth at around 3.5% next year, which would be slightly higher or maybe in line with this year's growth. And this is also because we have a couple of private investments coming to Slovakia. The largest one of them was just confirmed this morning and is the fourth car manufacturer that will come next year. It's Jaguar Land Rover, and they will build a new plant in western Slovakia. So even though this plant won't actually start production until 2018, but it will be there will be some construction works starting already next year, and the overall investment is quite significant. It is actually 1.5 billion euros.
Okay, so is this the reason why you expect economic growth to be sustained in Slovakia next year?
So this is one of the reasons. Also, we have the labor market improvement that has been affecting consumption. So consumption has been improving and growing steadily. So overall, we can expect all these components, sort of household, government consumption, to help as well. And then the private investment has been picking up. So even though public investment was the main reason why we achieved such high growth rates recently, it's actually been improving in the private sector as well. So in the third quarter, we saw growth of 5.9% on an annual basis, which was due to non-financial corporations investment.
How does the recent ECB decision to extend asset purchases affect the Slovak bond market?
The ECB has eased monetary policy even further at the December meeting. Slovakia, being part of the Eurozone, obviously is affected by the changes. And we have seen that the yields on Slovak government bonds have been going up and down. There's been quite a lot of movement recently. It seems to be stabilized by now. So we have 10-year government bonds at around 0.8%. And this is in line with our forecast, which sees them at 0.85% by the end of the year.
Now, the Slovak government usually does not do any pre-financing ahead of year-end, as its own debt brake rules do not provide enough room to do so. But how is Slovakia going to pay the €3 billion due in February?
We have a lot of bonds redemptions next year. Overall, it will be actually 4.6 billion in 2016. But the largest part of that will be in February, as you've mentioned. It's 3 billion euros that are due in February, and we expect that the agency in charge of the debt and the liabilities will have to conduct auctions at the beginning of the year. So this is the usual practice, that they try to do more auctions in January and February and get it ready for the rest of the year as well.
Okay, then I have one last question. What do you think is the main difference of Slovakia to other V4 countries like the Czech Republic or Hungary?
So when we're talking about GDP growth, for example, because obviously Czech Republic has been affected by EU funds this year as well, we could say that the labour market is still quite different, and we have seen a significant improvement in the Slovak labour market, even though our unemployment rate is still higher than in the Czech Republic, but the direction has been very good, and the magnitude as well. So this all will be affecting consumption next year as well, so we can expect domestic demand to be very solid, and on the other hand we have some good potential for foreign trade, even though this year it has been a little bit of a disappointment.
Okay, thank you very much for your time and insight.
Thank you.
The viewers, thanks for your time. Have a nice weekend.